Now, today we want to consider real estate and mutual funds. Which of them is a better investment for you? Which of them is a better investment for you? Over the years, investors have always been asking which of them is a better investment, either real estate or mutual fund. Where is better? Which of them is better investment for you to grow your funds? Which of them has less risk? Which of them can yield more return on investment on your capital over the years? So that is what we are talking about today. That is what we shall be considering today. And what is actually real estate? What is real estate? Real estate is actually could be in form of buildings, rental properties, lands, buying plots of land, rental properties that would yield you income. It could be a form of buying houses and or building or structures or lands. Okay, so after buying your first home, or building your first house, or moving into your first apartment that you built or you bought, any other building you are buying or any other land you are buying is most likely to be is just like an investment, because after buying your first home or after buying your first land and building your first house, any other one, subsequent houses or subsequent lands you are buying is an investment. So you need to have some consideration if it is worth it putting your money into buying of such property. Okay, you need to think twice and to know if it is a very good decision to make, putting your money into such real estate, if there are alternative means of growing your funds instead of going into real estate. Okay, so now what are mutual funds? Mutual fund is actually a professionally managed investment portfolios. Okay, is a professionally managed investment portfolio that actually pull money from multiple investors. Multiple investors pull money together and they purchase a variety of securities like stocks. They purchase a variety of security like stocks, bonds. Okay, stocks, bonds, into the money market fund, and different other assets are being bought by monies when several people, hundreds or thousands of investors pull money together in a fund that is called mutual fund, and they use that large amount of money to buy stocks, bonds, and different other assets in order to grow it together. Okay, and these professionals manage these funds and to ensure that they yield good return. So they offer investors, mutual fund actually offer investors opportunity to diversify their portfolio and have access to a range of assets with a relatively low investment amount. Okay, so now let us compare real estate. Let's just say real estate and mutual fund. Which of them is actually a better place for you to put your money? Which of them is a better place for you to put your money? So, which I'm looking about six aspects. Okay, six or seven aspects of considerations. 6 or 7 aspects of consideration for you to know whether it is better to put your money in either this or this. Okay, the first consideration which I'll be looking at is the first consideration should be the needed amount. Okay, the amount needed to invest. Okay, the amount of funds you need to start. Okay, so you should be aware that for real estate you actually need a bulk amount of money. You may not be able to buy a piece of real estate with a small amount of money like a $50, okay, like $100, okay, or even $500. You may not be able to buy a piece of real estate at this amount. Real estate are in thousands of dollars. Most times real estate, to purchase a real estate property, whether it's going to be a land or an apartment house or real rental properties like condo and the rest of that, you need you need to have some bulk money to the tune of thousands of dollars. But when you are talking about mutual fund, for mutual fund, you can actually invest in mutual funds with a $500. You can start with $500. You can even start with $100. Okay, you can even start with $50. All right, so you can start and grow your funds. You can actually invest in mutual fund with small amount of money, and you can continue to increase your equity over time. All right, you can increase your equity over time. So in terms of amount of money needed to start, the mutual fund is better than the real estate, because you can use small amount of money to start or to invest in mutual funds. So the second consideration we shall be looking into is the return on investment, ROI. Which one has a higher return on investment? Okay, which one has a higher return on investment? Historically, the real estate investment has a higher return on investment than mutual fund. Okay, mutual fund mostly over the years does about 9 to 10% on average return per annum return, interest per annum return. Mutual fund does around 9 to 10% interest, but the real estate mostly over 20% on average, 20% and even more per annum. Okay, you can your in terms of appreciation, capital appreciation over a long time, over a 5 to 10 years period, you should be having an average of 20% and above, 20% and above return on investment. You can, when you buy a real estate property, it will appreciate in value by over 20% per annum over the years. Okay, so you can see that in terms of return on investment, real estate is a better option in terms of return on investment. Okay, is a higher option in terms of return on investment. In fact, I bought a piece of property in 2011. I bought a piece of property in 2012. I bought a piece of property in 2012, and this is 2024. Now that piece of property has appreciated. Currently, as we speak, it has appreciated by 344.44%. Okay, I just did the calculation. The real estate property, because I know how much I bought that property in 2012, and going by the current market value of that property, it has actually yielded. This is about 12 years. It's about 12 years. It has yielded over 344.44% in terms of appreciation. Okay, and that is an average of 28.7% per annum in terms of capital appreciation. This is because if you divide this 344.44 divided by 12, the property has appreciated on average 28.7% per annum. And then if I had put that same fund my capital I used to buy that property in 2012, if I had put it in mutual fund, if it does 10% per annum, my property would have appreciated in value by 120%. Okay, so you see, this is 120% in 12 years, and this is assuming you did not reinvest the proceeds. Okay, assuming you did not reinvest your proceeds. So you see, can you compare 344.44% for real estate for that my particular property, and 120% capital growth if I had put that same money in mutual fund? So real estate does better in terms of return on investment over a long period of time, like 10 years. Real estate appreciates in value far better than mutual fund. So now the third consideration I want us to look at is in terms of risk. Okay, in terms of risk. Now, I told you earlier that a mutual fund is being managed by professionals, and it is invested not only in one security. It is invested, the pool of funds from various investors are professionally managed and invested in diverse assets like bonds, stocks, and several other securities. Okay, and so the risk is being spread. The risk is spread. The risk is actually spread, and so it's not is spread. So, but for mutual fund, this is for mutual fund, but for real estate is just the investment is just on the property. So the mutual fund has a lesser risk than real estate. Okay, mutual fund has lesser risk than real estate. So real estate can be affected by economic downturn. Okay, this can be affected by economic. Real estate can be affected by economic downturn. Okay, the price of property can be affected by the economic downturn. So that is why real estate is a higher risk. And also real estate, if you're not careful when purchasing real estate, if you're not careful, you could be scammed. Okay, you could be scammed if you don't do your due diligence and buy property from registered source. You could be scammed. And real estate can also, there could be a lot of issues in terms of legality of the property and all that. Okay, so legality of the property and also ownership. Okay, someone can come up to one of them and say he's the owner of the property and all that. So you need to be careful when investing in real estate to make sure you do your due diligence and buy from registered and legal approved sources. Okay, so that is the risk behind real estate. But in a mutual fund, your capital, most of the time your capital is safe, though your interest or return on investment might vary, but your capital is mostly safe. Okay, is mostly safe. So now let us look at another consideration in terms of ease of liquidity. What is liquidity? Liquidity is basically how easy is it for you to convert how easy is it to convert your funds or your investment, converting your investment liquidity is basically a function of how easy is it for you to convert your investment into cash. Okay, how easy is it for you to convert your investment into cash? So liquidity can actually, mutual fund can actually be converted in full or partially into cash by just a click of the button. Okay, just go to your app if you have an investment mutual fund app, or go to the website, your investors, your company website, the mutual fund company website. You can just log in and ask to redeem your funds, okay, to liquidate your funds, either in part or in full. You can just within the same day you can get all your investment deposited into your normal bank account. So it is pretty easy. But for real estate sometimes can take weeks, even months, and sometimes even years for you to be able to liquidate to sell your property. Okay, so and another thing that is there is that if you are in haste to sell, if you're in haste to sell your real estate property, it will now become a distress sale. It will now be called distress sale. Okay, if you're in haste, it will now become distress sale. And distress sale most times would actually drop. It will actually drop the value. It will drop the value of the property. Okay, it will now drop the value of the property, and you may not be able to sell at a fair price. Okay, you may not be able to sell at a fair price when you are doing distress sale. So except you are patient enough to look for the right buyer that will buy that property. So number 5, so we have just said number 6 that a mutual fund has a higher liquidity. You can actually convert your investment into cash easily. Okay, so that's an advantage of mutual fund over real estate. So another consideration we're going to look at right now is on inflation. You know that inflation is so high recently. Inflation in several countries right now is over 20%. Okay, inflation in many countries is over 20% due to several factors. What is happening in Ukraine and the different other parts of the world in different countries. Okay, so the inflation rate is high. So whatever investment you are putting your funds into should be an investment that would actually match or be a hedge. This is a hedge. Inflation hedge over inflation that will actually prevent your money from losing value. Inflation is actually when your capital begins, or money monetary value begins to lose value. Your funds begin to lose value as a result of inflationary pressures, okay, or economic problems. So real estate is an effective compare real estate and mutual fund. Real estate is actually an effective hedge. It's an effective hedge against inflation. An effective hedge against inflation. So the real estate is an effective hedge against inflation, and as inflation actually rises, so do the property value rise. As inflation rise, so does the property value rise and the rental prices rise. So you hardly lose when it comes to real estate if the property is legit. Okay, but in contrast, mutual funds are vulnerable. They're actually vulnerable to inflationary pressures, and your return on investment can be eroded over time due to inflation. And I've told you that mutual fund does an average of 10%, and you can see the current inflation rate for several countries is 20%. So can you compare 10% return and 20% inflation? So the inflation rate most times currently is higher than the return on investment per annum for mutual funds. So your mutual fund is not a good hedge against inflation as we speak right now. Okay, so if the real estate is a better option to hedge or protect you. When I say hedge means protecting your funds against inflation. Okay, so let's see number 6, the sixth consideration in terms of tangibility. Tangible. Okay, the real estate in terms of tangible assets. This one you already know that real estate is a tangible asset. Okay, the real estate is a tangible asset and a physical asset that can be seen. Real estate that can be seen. Okay, can be touched. You can even live in it. Can be lived in. Okay, can be lived in. And so it provides some form of a sense of security when you have a physical structure, a physical property, a sense of security, and can be used for personal and business purposes. You can actually use your real estate space for personal property, business or personal uses. Okay, and on the other hand, the mutual fund actually they are financial assets. They are financial assets that are intangible. Okay, they're actually intangible and depend on the performance of the underlying securities. Depends on the performance of the securities, in the sense that the securities, when you talk of bonds and stocks and the rest of that is invested into them, your mutual fund and money is invested into. So it's intangible. So the final consideration is on taxes. So the real estate, you have comparatively lesser tax. Okay, tax when you are trying to liquidate your real estate. Okay, you have a lesser tax in many countries when you are trying to liquidate your real estate, which is lesser than when you are than the mutual fund. Mutual fund, you are actually taxed greatly. So these are the considerations. So what is the bottom line? What is my advice? The summary advice. The advice is that you should not put all your eggs in one basket. Do not put all your eggs in one basket. The solution to most investment decision is called the principle of diversification. Okay, I actually believe that a certain percentage of your capital should be in real estate, a certain percent of your capital should be in mutual funds. Okay, a certain percent of your property should also be in raw stocks, stock market, because mutual fund is a combo of stock, bonds, and other securities. You can also pick your individual stocks yourself. All right. So also another certain percentage of business should also be in actual business. Of your funds should also be in actual businesses, and etc. okay, and etc. So you should diversify. Why do you have to diversify? Diversification help you to spread your risk. Okay, it does help you to spread your risk, so that in terms of economic downturn or whatever it is, risk, all your sources of income are not being affected. Okay, so it helps to spread your risk. So, and I believe that you need to have some liquid funds, some easily convertible funds, easily liquid funds, mutual funds, so that you can be able to seize opportunities. So you need some funds to be able to seize market opportunities or business opportunities. And if you put it in real estate, put those funds in real estate, to actually liquidate, convert such funds may not be easy. So you should, as much as you should have real estate investment, you should also have mutual funds, so that you can easily convert funds into cash and use it to execute business opportunities that come across your way. Okay, so this is very important. You should have a combo of several investments in your investment portfolio. You should have a combination of several investment assets and securities in your investment portfolio. It is called diversification. So that is it for you. Please, you might want to, if you want to do any business plan, if you want to do a business plan, I do business plans, feasibility study, okay, for any business, whatever kind of business. Just contact me. My email address is in the description box of this video. Okay, you want to join our free Telegram channel? We have a free Telegram channel, okay, where we run minds about businesses. Is the link to that Telegram channel is in the description box of this video. Kindly join. Okay, kindly join. I post several business ideas in that Telegram channel. Please, if you're here to subscribe, to this YouTube channel, please subscribe so that we can grow together. Okay, several more ideas and business ideas and also investment ideas will be coming your way from time to time. Kindly subscribe to this YouTube channel, please, and also share this video with your friends, and give this video a thumbs up if you found some value from this. Please kindly subscribe, kindly share videos with your friends, and we'll grow together. Till I come your way next time, do have a wonderful day ahead. Bye.